Interest rates are at all-time lows and house prices have been booming from the cheap credit, but big interest rate hikes are coming by July 1st. In this video, I'm going to be going over the developing story of rising mortgage interest rates, rising bond rates, and I'm also going to be going over how the RBA is going to be ending its term funding facility where it offers cheap credit to banks, and also it's going to be ending its yield curve control where it buys 3-year government bonds, so that means banks can offer cheap 3-year fixed rate to customers for their home loans. I'm also going to be going over how many property investors are being fed up by the eviction moratoriums and by the government continuing to intervene on their investments, and they're giving up on property and they're selling up, and they're selling up big. What you need to know is what's fueled this housing boom is cheap credit, but that cheap credit is coming to an end. And for every 1% increase in interest rates, house prices can fall 10 to 15% because people's borrowing capacity is getting maxed out right now. And when interest rates rise, their borrowing capacity is going to be reduced. So it says here banks are primed for a $180 billion cliff. Senior bankers are developing plans to overcome a $180 billion refinancing cliff to try and avoid surging borrowing costs for households and businesses. Last year, the RBA created something called a term funding facility, and this is where they gave very cheap credit to banks at just 0.1% interest. That's right, they pretty much bailed out the banks, gave the banks free money at just 0.1% interest to go out there to loan to households for mortgages and go to loan out there to small struggling businesses. So the term funding facility is set to expire on the 30th of June, and that means banks can no longer get this cheap credit and they're going to have to borrow from the more expensive wholesale markets. But this couldn't come at a worse time because economists at the Commonwealth Bank of Australia expect the RBA to end its yield curve control program at the end of June as well. The RBA started something called yield curve control, where it started buying 3-year government bonds to lower the rate on those bonds to 0.1% so that the mortgage rates could drop significantly, and also loans for businesses borrowing at 3-year fixed rate would drop significantly as well. But that's going to end at the same time this term funding facility is ending for the banks. Now, this is not financial advice, but that means mid this year, mortgage interest rates are going to start increasing significantly. So if you haven't locked in your rate, it may be a good idea to start thinking of doing that now. But this also comes as the 10-year US Treasury bond yield hits its 14-month high. And also the Australian 10-year Treasury yield is near its all-time high at 1.81%. That's up more than 1% from its bottom in November, where it was just 0.7%. So as you can see, yields are rising rapidly. But the US Treasury yield has risen even more. It's now around 1.74%, but that's up 1.2% from its 0.5% bottom last year. And experts are saying the 10-year Treasury yield could hit 2%, maybe even 2.5% by the end of this year. And according to Bloomberg, rising mortgage interest rates in the US are starting to become a big problem. And this is going to be a big problem, not just in Australia, not just in the US, but globally. But the Freddie Mac 30-year fixed rate mortgage has gone from a low of 2.65% to now 3.17% as interest rates have risen for their 6th consecutive week. And you better believe that the Treasury yields have gone up 1.2%, so we could see mortgage interest rates in the US at the end of this year start hitting in the 4s. And the numbers are starting to beat the 2007 and 2008 subprime mortgage crisis. So history doesn't always repeat, but it often rhymes. There's been the largest volume of mortgage originations in history, the most refinancing since 2003, the most amount of debt taken on by first home buyers on record, and a massive $182 billion of home equity taken out in 2020. If this is not screaming housing bubble, I don't know what will. And this also comes with APRA saying that there's no problem, there's no housing bubble, we're not going to do anything, we're just going to let house prices run hot, there's no risks here. Well, I think that's crazy, and many Australians think that's absolutely crazy. We are seeing things get very bubblicious, and it's looking like house prices could increase by 2.8% in March alone in Australia. But I guess the workers at APRA must have too many investment properties and not want to do anything to hurt their bottom line. And another risk that's coming up for the housing market is home builder is coming to an end at the end of March this month. And of course, lobbyists are coming out there to extend all these temporary government programs, because you know there's nothing more permanent than a temporary government program. And they're saying, no, the industry's gonna break down, we're gonna fail unless you extend this, we need the money. But guess what? whenever the government goes out there and gives all these incentives for builders to go out there and build these homes, all they do is jack up the construction costs and make you pay more. Not just the construction costs, but also the land prices skyrocket as well. And also in Australia and in the US, there's been huge changes to tenants laws and eviction moratoriums. So lots of investors are now getting fed up with the government continuing to intervene in their investments, and they're saying, look, I'm just going to sell, I don't want to deal with this stress anymore. And who knows, maybe they'll go to the stock market, precious metals or cryptocurrencies. And you have to deal with the government saying, look, I know they're not paying rent and you're probably going to default on your mortgage, but we're not going to do anything about it. This comes as the CDC extends eviction bans in the States, and also Victoria is changing eviction laws and lots of laws for tenants, meaning they have more rights, they can make changes to your house, they can do things to the house, have animals, and they have a lot more rights and you have no say over it. I'm not saying whether this is right or wrong. All I'm going to go over is how this is going to affect the property market. It says here, a federal ban on eviction is putting the squeeze on smaller landlords who are unable to directly access COVID rental relief funds, and some are starting to sell properties to recoup some losses. This is also going to reduce the affordable renting stock in an already unaffordable rental market. And this comes as Marilyn Blackburn, a property investor, she's selling her 9 investment properties. And you better believe there's going to be more real estate investors going to do this as well. She says it's been 6 months with these tenants and she's lost around $12,000 in rents alone. This also comes with a consensus survey which found 15% or 6.7 million renters were behind on their rent payments. But even worse, 27% or 11.8 million said they're not sure how they're going to pay next month's rent. And in Victoria, Miss Cullinan said she believes rents are going to go up and there's going to be some short selling from property owners. And something that they're not also saying here is there's still lots of other fees when you're a property investor. You still have the council rates, the water rates, the insurance, the property maintenance. Even though over the past year they're able to call up their bank and get a 1-year loan mortgage deferral, that doesn't mean all these other expenses don't add up and it's becoming too much. And we are going to see some forced selling from property investors from these eviction moratoriums as mortgage holidays come to an end and as the debts mount up. Put it in simple terms, this means bond rates are going up, which equals mortgage rates going up. Mortgage rates going up by 1% means house prices can go down. Because not only are mortgage rates going up, and you may think a 1% increase in mortgage rates, that's not a big deal, but this is also happening as house prices rise. So say for example, a house was for $500,000 and you could get an interest rate of 2.5%. But because of low interest rates, now that house has gone up to $600,000. But now interest rates are rising. So now if someone goes to buy that property at $600,000 and with an interest rate of 3.5%, the mortgage repayment on a house of $500,000 with an interest rate at 2.5% is $1,986. A mortgage repayment on a house that house that's now $600,000 and interest rates have gone up to 3.5%. Guess what? Your monthly repayment has gone up almost $800. Your monthly repayment is now $2,704. I hope that's a big wake-up call for you to know how much of a factor interest rates play in the housing market. And like I said, if interest rates keep going up like this, we could see mortgage rates, even if the central banks like the Federal Reserve and RBA don't lift their official cash rate, we could see mortgage rates go up 1.5%, and that means house prices could fall 15 to 20%. And also a main thing that's been fueling this housing boom is low supply. But you better believe a lot of homeowners are seeing these records being smashed for home sales, so they're going to want to start listing their properties for sale in this booming market, especially all these property investors that are going to want to get out. They're going to want to get out at the peak, and so we may see a lot of stock from property investors and fed up from all these eviction bans coming soon. So guys, I urge you, don't FOMO in right now just because you're seeing all over the media that there's going to be boom, boom, boom. I am thinking that mid to late this year, the housing market is going to cool significantly, especially if mortgage rates skyrocket. So for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you updated on the latest housing market and economic news here in Australia and the US. I'll pop up some of my other videos here. If you're bored, I'll see you there.